It's one thing to say, here's a speculative investment. It didn't work out. And sometimes they don't. But after all these warning signs, if you decide now to get into it, and then it continues to fail, then the problem is it isn't a speculative investment that failed. There's a problem with you, is what the problem is. That's what the space is going to have to overcome. That's why I think they're going to get a big loss of institutional money as we move forward. It is morphed from it didn't work out to potentially, if you stick around in the space from this moment forward, there's now a problem with you.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart. A seismic event just rocked the cryptocurrency universe with last week's implosion of FTX, the world's second largest crypto exchange. Tens of billions in client assets and market value alike have vaporized, and it seems mismanagement for certain, and possibly fraud and outright theft lie at the heart of this disaster. To help make sense of what exactly has just happened and what repercussions we should expect from the collapse of FTX on both the crypto ecosystem and perhaps the financial markets in general, we're fortunate to be able to turn to Jim Bianco of macro research firm Bianco Research. Jim has been tracing the unfolding developments on an hour-by-hour basis. Jim, thanks so much for joining us today.
Hey, thanks for having me, Adam.
Jim, it's always a pleasure. You're always such a fun and incredibly intelligent guy to interview here. I'm super excited to dig into what happened with FTX with you because it's so topical. You've been covering this unfolding debacle over the past couple of days very intently. And I think a lot of our viewers kind of know something just happened, but aren't entirely sure what just happened. So I want to peel back the layers of the onion here with you. Real quick before we do, though, can we just set kind of the high stage? We'll get to the macro in a bit, but what is your current assessment of today's economy and financial markets?
I think a lot of people are hopeful that inflation is peaked. I agree that it has peaked, but I also think that that's not the right question to be asking. The right question to be asking is, how far down is it going to go? The hopeful crowd thinks it's going to go back to 2%. That means the Fed can stop raising rates, and maybe we could even start talking in the second half of 2023 about them cutting rates. And that's got financial markets, mainly the stock market, excited in the last few days. I'm of the opinion that it's not going to go down that far. It's going to go down to maybe 4%, and that the Fed raising rates to somewhere near 5% only gets you back to neutral. And at some point, there will be a movement to get the Fed to actual restrictive territory. And when we do that, I suspect then we'll get that recession that everybody has been forecasting to happen in 2023.
Okay. All right. I can't wait to dig into the particulars of that with you, both to see what you see unfolding, as well as I would say there's a lot of the folks that have come on this channel recently. They generally seem to have been having the same outlook in terms of how things are going to play out. I'm now beginning to see a divergence between a crowd that says, nope, inflation is going to come down a lot faster than expected, and others like yourself who are saying, not so fast. So I am looking forward to digging into that with you. But let's get to the big event of the past couple of days, which is the implosion of FTT, which was, I believe, sort of the larger holding company that was run by a young man named Sam Bankman-Fried, if I'm pronouncing it correctly. And
he goes by SBF.
SBF, yes, that's his moniker that he's well known by. Certainly easier to pronounce too. But FTT was basically the holding company for FTX, which was the second largest crypto exchange in the world. This whole thing just sort of collapsed overnight. It's tremendous how fast this whole thing just vaporized. And of course, now we're learning all sorts of gory details. But can you just brief our users on exactly what's happened here? And maybe we should start by setting the stage. Real quick, do you have anything else to say just to help people understand sort of what FTX's role is? And there's a hedge fund arm called Alameda Research that was part of this whole thing.
Yeah, so and to correct a couple of things here too. There's two FTXs that people should be aware of. There's FTX US, which is a US regulated exchange. That one went into bankruptcy too, but only because its reputation was being trashed because it was FTX. But by all understanding, at least as of the time of recording, nobody's going to lose a whole lot of money on that side of the equation. There's a global one that was headquartered in the Bahamas called FTX.com. That's the much larger one. And that's the one where there's all of the problems. The FTT thing you mentioned, that is their own cryptocurrency, the FTT token that they issued. And I'll try and explain that in a second. Alameda Research, as you pointed out, was the original company Sam Bankman-Fried created 5 years ago in 2017. It is a trading firm. It is a hedge fund. It trades in cryptocurrencies, a little bit in the traditional markets, but mainly in cryptocurrencies. As best the story's been pieced together, if you back up 6 months ago, you'll probably remember that the Terra Luna blockchain failed and the UST stablecoin went from $1 to zero in less than a week. And from that, there was a lot of bankruptcies. Three Arrows Capital, the big venture fund that was in the crypto space, Celsius, which was another centralized exchange, Voyager Digital, another centralized exchange. They all failed in the wake of that. What we now are learning is so did Alameda Research. They wound up losing so much money that they were probably undercapitalized or at a minus 100% or something to that extent. We didn't know that because Sam Bankman-Fried, who owns Alameda Research and owns FTX, and they have no real corporate board structure. He kind of runs the show between both of them, was using customer funds at FTX to extend loans to Alameda Research to keep them solvent. And they were buying up all these other bankrupt firms like Celsius and Voyager Digital because they had extreme exposure to them. So instead of taking losses on that, they would buy them up and bring them internally. Let me stop here and point out what I have described is a centralized exchange / bank committing malfeasance, or at least maybe fraud at the worst. We've seen this in the traditional world over and over and over again. The last example of somebody taking customer funds for their own personal use was MF Global, run by John Corzine, former governor of New Jersey and co-CEO of Goldman Sachs, did it in 2011. We saw these kind of bank failures all throughout 2008. If you want to go back to 1994, we saw this kind of gimmickry that they were doing with the entire Mexican banking system during the tequila crisis. None of this is new to that extent, and none of this is really a crypto problem. It's not a failure of a blockchain, not a failure of that. Now, you could argue that the animal spirits and the wild speculation in crypto led to this aggressive behavior, compounded by the fact that these foreign exchanges have virtually no regulation. As a matter of fact, somebody was saying that they are so unregulated that the only thing that lawmakers or the police or investigators are going to have to get Sam Bankman-Fried on is he violated his terms of service. He didn't even violate laws because there are no laws for these global types of exchanges, which, by the way, in fairness to the industry, they have been screaming to the SEC and everybody else to make such laws. And the SEC and a lot of other regulators have been slow walking this whole lawmaking thing, largely because they're not exactly sure what they're supposed to do yet. They're still trying to understand this new space. And then we've got this blow up as well. So it is a failure of the types that we saw in the 30s, in the bank runs in the 30s. It is, or we saw in 2008, we saw in 2011, MF Global, or even to some extent, a little bit in 2020. That's not new. What is new is the space that it came in on. And lastly, you mentioned the FTT token. What that was that they created their own printing press. Is what they did was they issued their own token. They then transferred a bunch of those tokens to Alameda Research. Alameda used those as collateral to take out loans for more legitimate tokens like Bitcoin or Ethereum or USDC Circle, the stable coin. And they were basically, like I said, we're creating these tokens out of thin air and using them as collateral for other loans. That is a big red flag. That should have never happened in the first place. That might be unique to the crypto space. You and me, at last count, we're still not allowed to have a printing press in our basement to basically print up fake dollar bills. And then you run to the bank with those fake dollar bills and go, here's $1 million of fake dollar bills. Now give me $1 million loan. And so that's essentially what they wound up doing.
Okay. Of course, this just blows the mind of anybody sort of listening here of like, my gosh, how do they get away with it? And of course, this guy, SBF, he was very young. I mean, he was under 30 for much 30. Of this time.
Yeah.
Yeah. As was the team at Alameda. I think it was run by a 28-year-old. The CEO was 28-year-old woman. We don't need to get into all the salacious, the salacious details, but apparently, girlfriend or ex-girlfriend of SBF, the small team that was running Alameda apparently was all dating each other. I mean, it was basically a bunch of 20-year-old, I don't want to say kids because they were adults, but young, 20-year-olds, responsible for managing billions of dollars, perhaps tens of billions, and no oversight, both from just sort of, a board, more adult supervision, but certainly not from the regulators, like you're saying. So of course, sort of begs the question of like, oh my God, how did how do people give these guys money? Because I mean, Sam Bankman-Fried, I mean, he attracted an awful lot of outside capital in as investors, right? Really big names.
Yes. In the beginning, when he created Alameda Research, he was doing a bunch of crypto trades, and he discovered that there was a way that he could buy Bitcoin in the United States and sell it in Japan for as much as a 10% difference. And as the folklore goes, when he first started doing this trade in 2017, he was doing it with like $200 a day of his own money. Within 3 months, he was up to $10 million a day. This is how profitable this trade was. So he kind of got this mystique about him as being this brilliant type of trader that made all this money. And he did. He made a lot of money legitimately.
Okay.
And then
do we really think that he discovered this arbitrage and that it lasted long enough for him to really make this kind of money?
I think we do, because the arbitrage had a number of barriers of entry. You had to open up an account in Japan, you had to have an account in the US, you had to transfer the coins. And he went through an enormous amount of effort to try and put all the pieces in place. This was not something that you or I could have done in 2017. Hey, on this account here, buy some Bitcoin, transfer it to this account here, sell it in Japan at 10%. It was a lot more involved than that. So let's understand that at every one of these things, you start with somebody that did something legitimately and got rewarded for it big. And that's what he did. And then he started the FTX exchange. And the FTX exchange started to grow quickly. It became very popular. One of the reasons the FTX exchange became very popular is their moniker is by traders for traders. I think that's where the FTX acronym came from, to some extent like that. And it was in the early days. A lot of these exchanges are difficult to use. They don't look like your Fidelity or Schwab or JP Morgan brokerage accounts websites. His was a little bit more slick. It was a little more intuitive. It was easier to understand. It gradually got a lot of interest in the exchange. But I think where the mistake came was somewhere along the line when prices peaked and losses started to occur. They started cutting corners to support the hedge fund business. I'm guessing under the guise that everybody has, and then when the market rebounds, I'll pay it all back. Mm-hmm. And then when the losses came from Terra Luna and they really started to do things that were unethical, I'm surmising that the rationalization you give yourself is Yes, and then when the market rebounds, everybody will be made whole and no one will be hurt or none the wiser. But then you wind up getting sucked deeper and deeper and deeper into this. Then about 2 weeks ago, CoinDesk, which is a popular website for cryptocurrency news, got a hold of their balance sheet or part of their balance sheet, which showed all of these FTT tokens, which are, again, I'm going to issue a cryptocurrency. Good. I just issued 5 billion of it. I send it to my other entity, Alameda Research. They then go out to cryptocurrency lenders and say, I got 5 billion of FTT. Give me a 5 billion loan of something legitimate. And that's what the balance sheet showed. And it got people a lot of nervousness about the financial position of FTT. One of the people that owned a lot of FTT token is the biggest cryptocurrency firm in the world, Binance. Now, when Sam Bankman-Fried started FTT in 2019, one of his original backers that really helped him get it off the ground was Binance. And he was very close with CZ. And they subsequent CZ, Chanhuang Peng, if I'm pronouncing it right, goes by CZ. It's a lot easier like SBF. And he helped him start this exchange. And then they had a difference of opinion and a little bit of falling out. One of the things that Sam Bankman-Fried has done along the way that has rubbed the cryptocurrency community the wrong way is he has spent an enormous sum of money on political donations. He is was the number 2 donor to the Democrat Party behind George Soros. He gave $40 million to the Democrat Party in the midterm election cycle. He was using his influence and his money in Washington to help regulators write the cryptocurrency regulations that they're currently working on. They're not done, they're working on it. A lot of people in the industry were very uncomfortable with him because they didn't think he represented the best interest of the industry, that he was going to use his vision of regulation to build a moat around FTX. Or as the joke went, he's trying to take the FTX business plan and make it the law of the land. And if you're not the FTX business plan, you're going to find it very difficult to do business. And so what CZ did, I think, when he saw the balance sheet, this is, again, speculation, and I happen to believe it, he wasn't playing 4D chess here. I'm going to bury this guy, and I'm going to bankrupt his firm in 2 days. He was going to sell his FTT tokens, and he made a comment on Twitter. And by the way, everything in the cryptocurrency space happens in real time on Twitter. They communicate with each other, secret negotiations. I'm not kidding you, secret negotiation. Everything is done on Twitter for everybody to watch. And so when he tweets out, CZ tweets out, I'm going to sell my FTT tokens. He also makes a comment, and I don't trust people that turn their back on the industry in Washington, or something to that effect. I think he wanted to embarrass him. I don't think he thought that this was going to open the trap door and the entire firm was going to collapse, take the cryptocurrency market with it. But what he didn't know, what we didn't know, was just how precarious a position FTX was in. And what I think CZ underestimated, and we all underestimated, is how in the crypto universe, Sam Bankman-Fried was not very trustworthy. So the minute that there was a problem, people had no problem running for the door. Because his motives were already under question to begin with. And now that you tell me there's problems and CZ's leaving, good enough, I'm out too. And then there was a good old-fashioned bank run. And since he lost customer money, he couldn't meet that bank run. And some people say he even spent a lot of that customer money on political donations and paying for putting his name on the arena that the Miami Heat play in, or putting a patch on Major League Baseball umpires' uniforms and everything else. That's where all the customer money went. And so there isn't as much left. And now that they're in bankruptcy, there's going to be a FTX.com. Those accounts are going to get a small fraction of what they had in those accounts. FTX US should be a little bit better off, but you're still going to have to go through bankruptcy. You're not getting your money tomorrow in FTX US. It's going to be a little bit of time before you get your money.
Okay. And let's just scope this. So in terms of the client assets that are at risk here, What are we talking about? Billions, tens of billions?
Yeah, somewhere around 10 to $14 billion. And I also think what's important to understand is the type of client assets. Sure, a lot of these accounts were, retail investors. Technically, FTX.com was not supposed to take US money. That's what FTX US was for. But if you use a VPN, a virtual private network, you could have opened up an FTX account. So a lot of that retail investor would probably be offshore, overseas. Some of it is US. But more importantly, there's a lot of other brokerage firms, other trading shops, hedge funds, venture capitalists, cryptocurrency miners, cryptocurrency validators. They all had accounts with them. Right. These are important to understand because as a financial services firm like a hedge fund, or even as a cryptocurrency validator or miner, in a typical day, you've got money coming into your account every day. You've got obligations you've got to pay every day. Maybe I have some money, I don't, but if I had some money on FTX, it's not life altering and I just have to wait it out and see what I get. But these guys have obligations they got to pay this afternoon and tomorrow. And so the fear is some of these firms, BlockFi being the big one right now, is stop doing business. And then the fear is that they had to pay somebody else and they're going to have to stop doing business and they're going to have to stop doing business. And this whole daisy chain effect, reminiscence of what we were worried about in 2008. Right. When, Lehman failed and then AIG failed and everybody was worried about the daisy chain effect. The big difference here, the cryptocurrency universe does not have a central bank with a printing press that can bail out everybody like the traditional financial world does. Correct. And this is why this has become such a huge problem for them.
Just in that last point alone, I saw something this morning that CZ announced that Binance was starting some sort of fund to
a rescue fund or something like that.
Yeah, yes. Exactly. And basically inviting the rest of the ecosystem to come in and join it. Right. So we'll see what the pickup of that is. We'll see if it'll be enough to make a difference, but it's being done for the exact reason you just mentioned there is there's no lender of last resort currently in that marketplace to try to help stem the contagion effect that everybody's worried about.
Right. And in and of itself, that announcement is interesting, but it's really about the details of to who qualifies. Is it going to be protocols? Is it going to be businesses? Because just as a quick aside, there was another company that they had, FTX Ventures, and there's dozens and dozens of cryptocurrency companies, we call them protocols, that were building new additions to the blockchain, new types of financial services firms, and they got funded by FTX Ventures. Well, one of the problems was their treasury, their funding was in an FTX account, and now that's frozen. And a lot of these firms have payroll they got to meet on Friday, and they don't have their money anymore. And they've got to pay for server space. They don't have their money anymore. And they got to pay rent. They don't have their money anymore. And so a lot of these FTX Ventures, a lot of people in the cryptocurrencies place go, yeah, a couple of these are really good protocols that people were very high on. And he's saying maybe we'll put together a fund to basically fund these protocols to continue to work on building a better ecosystem for cryptocurrencies. The only issue with that is you could do that, but FTX Venture still owns a lot of that company. You're just diluting it is what you're winding up doing. And that just because FTX Ventures goes bankrupt doesn't mean if they own 30% of that venture, that 30% goes away. They still own it. And if you wind up making it very successful, you wind up making more money for the bankruptcy. You don't wind up taking it away from them. So that's why I said it's not a bad idea by itself. It's just what are the details? And does that expand to centralized exchanges? If another centralized exchange fails, are they going to put together some kind of insurance fund for them? We'll have to see what he suggests.
Okay, but just a massive amount of uncertainty hanging out there right now.
Yes.
So just in terms of the contagion effect here, and sorry, I'm trying to navigate through like 50 other questions I have here. but
You don't want to go Lex Friedman and do a 5-hour podcast here and talk about this?
Yeah, why not? Exactly. So put this up on Twitter. We'll go with what was it? They had like a 13-hour one, didn't they? Over the weekend?
Yes, the Twitter Spaces yesterday. I listened to some of it. They ran 16 hours straight on Saturday and 14 hours yesterday. And they had Elon Musk and they had CZ. This morning they're going to restart it with Mick Mulvaney. They're just like going around the clock talking about this stuff, pretty much.
Wow.
It's kind of like you and me are about to do.
Yeah, exactly. The challenge is, I was kind of hoping to get this within an hour, and of course, maybe we need 14 more. All right. So you talked about these companies inside FTX's investment portfolio, and if they were to lose their funding and fail, that's kind of an arrow in the heart of some of the innovation that folks are hoping is going to drive cryptocurrency from here. Then you just have the contagion effect across the rest of the cryptoverse, right? Which is, hey, some people had stakes in FTX. FTX had strategic investments in other companies. We just don't know. There's so much entanglement there. We don't know what's going to happen if the FTX part indeed just goes poof, right? But then there's also the reputational damage, right? The people who are saying, hey, either I was getting into crypto, but I'm getting out now because this whole thing just seems so, Wild West in a way that scares me. And then there's a point that you tweeted about this morning, Jim, about how, this may be a real delay or disincentive of institutional capital moving into the crypto space, which was kind of the big hope of the space. Hey, we're going to get legit enough that finally the big institutions can start, feeling comfortable putting their capital in here, and then that's going to create a whole revolution in the cryptocurrency space. So, how big a concern of each of those ones? Which ones are you most concerned about here?
Well, depending on which one you're talking about, all of them to some extent. Reputational damage. There's a lot of reputational damage that is probably going to come down on some of the big Silicon Valley firms. Sequoia Capital is a firm that invested $220 million into into FTX. They last week announced they're going to write it down to zero. But Sequoia Capital is a platinum firm. This is like the Sand Hill Road is the street in Silicon Valley where all of the big VC firms are. This is the top of the heap of Sand Hill Road right now.
Yeah, Sequoia Capital is like the gold standard of Sand Hill Road VC firms.
Right, and they got burned on this like everybody else. Their reputation has been taken down a notch too. And people are starting to say, how do Silicon Valley's VCs become so successful? And they'll give you some song and dance about how brilliant they are in understanding the business and understanding how this stuff works. But people are saying, nah, it's more like spray and pray. Just invest in 5,000 of these things. 4,990 of them go bust. The other 10 go up. The other 10, you'll have a Snap and a Facebook and and a couple of others like and a Google in there, and you wind up becoming very, very rich, and it makes up for all of your other losses, and you had no idea which ones were going to be in there. So their reputation has been hurt. The cryptocurrency space was hoping for the adoption of institutional investor money to come in, and one of the things I was trying to point out in that tweet is when you are a fiduciary for other people's money, there's always difficult questions you're going to be asked. And the one that everybody's focused on is $80 million of FTX money came from the Ontario Teachers Pension Fund. They're going to have to write that down. So teachers in Canada are going to take an $80 million loss. Now, I know that the space likes to say, oh, that's terrible. You're thinking about, your favorite second grade teacher with an apple on the desk. But an Ontario Teachers Pension Fund is a very sophisticated institutional investor, and it just has a very bad look. And after they take a loss, if I am an institutional investor that is supposed to hand out money on behalf of somebody else, a pension plan, an institution, a mutual fund, whatever it happens to be, given all of this, think of you, Adam, given all of this, if you tell your customers, today, I want you in cryptocurrency, and then tomorrow the prices fall, people will look at you or me or anybody else that does this and say, boy, you just don't get it, do you? I mean, it's one thing to say, here's a speculative investment. It didn't work out. And sometimes they don't. But after all these warning signs, if you decide now to get into it, and then it continues to fail, then the problem is that it isn't a speculative investment that failed. There's a problem with you, is what the problem is. That's what the space is going to have to overcome. That's why I think they're going to get a big loss of institutional money as we move forward. It is morphed from it didn't work out to potentially, if you stick around in the space from this moment forward, there's now a problem with you.
So I'm just curious, I'm asking you to totally speculate here, but do you think this is a permanent setback that like institutional capital is never going to come into the space? I'm not saying that's what you're saying. I'm just asking if you think that's a risk here. And if you don't, if you think it's eventually dust will settle and folks will begin to stick their toes back in, how many years back do you think this may be setting things?
All right, so I don't think it's permanent, but I do think that what the industry has to do to get its reputation back and to get its capital back is it's going to have to completely reorient itself. First of all, real quick, if you go through the history of new technologies, go back to the canals 200 years ago, or the invention of the internal combustion engine, or the bicycle, or the television, or the internet, these speculative mania explosions are common with new technologies. That's not nothing we haven't seen before. Why? What is the use case for cryptocurrencies? Why do they exist? I happen to think there is a use case out there. It is called, it is the trustless ownership of my money. For those of you that are watching on TV, I have what's called a ledger right here. I'm holding it up. This looks like a USB drive. This is what's called a cold storage unit. I have my cryptocurrencies that are falling in price every minute on that ledger. And as long as my seed phrase, which is my password or my keys, is only known to me, it cannot be hacked, it cannot be censored, it cannot be taken from me. And that whole idea of having trustless money and having decentralized protocols where I can connect that to a decentralized protocol and swap currencies from one coin to another, send them somewhere else, lend against them, borrow against them within prudent means, is without it being knowing who I am or being censored in any way or being restricted in any way, is a very appealing idea for a lot of people outside of the United States. I know some people are going to be cynical and say drug dealers and terrorists. Okay, there's that issue too. But we in the United States have probably the best financial system in the world. And we enjoy it, especially if you have means. But if you don't have means and you live in a country where your currency gets depreciated, where your financial system, your banking system is rife with corruption and cronyism, and your money constantly gets stolen from it left and right. Remember Cyprus taking money out of people's deposit accounts about 10 years ago as another example. This is very appealing for them. And this is what the industry was promoting early on, which is one of the reasons why I became interested in it. I was like, I could see that. I could see that having a big use case. It then lost its way. It became this out of control casino where everybody was betting and stealing and hacking, and so it's lost its way. So hopefully this is a wake-up call that we say, why are we here? What is the purpose of cryptocurrencies? If it all winds up becoming on centralized exchanges regulated by the SEC, you've just created a digital version of what we already have. It doesn't serve any purpose. But if you want to create something different with the promise of no censorship, now maybe you and me, I'm not concerned about my money in my Citibank account, or somebody else might not be concerned about their money in their JP Morgan account. Fine, but if you live in Argentina, or if you live in the Middle East, if you live in Africa, or if you live in Asia, and that's more than half the population of the world right now, this is something that you might find very appealing. Let's get back to that. Let's get back to creating a new type of financial system. If they do that, the institutional money and interest will return. But if they want to promote themselves as being Vegas, but Vegas on steroids, the money's not going to be anywhere near them if they're going to continue to promote it in that way.
Okay. I'm getting a little bit ahead of my questions here, but do you feel then that we almost need even more of a reckoning to come through the crypto space here to really clean out the hucksters, the shysters, the casino, pumpers, and then it's the true, believers that remain in terms of, hey, let's get back to building the basics of the better system that we were hoping to do.
Yes, and I think that that's already underway. Remember, I said Alameda Research probably blew up in April in May or June when the Terra Luna UST debacle happened. Yep. It's 6 months later, and we're just figuring this out. I think that the ramifications of what happened with the FTX failure is going to take a year to basically filter through the entire system before we completely and totally understand what it is. And yes, I think that it is going to really have to really clean out a lot of people. Like, for instance, one mentality that they have a very Silicon Valley mentality in this space. And what that is, you build a new protocol, that's what they call it, a new piece of software to put on the blockchain that will help you trade or lend or borrow or do something else. And what we typically see in Silicon Valley mentality is version 1.0 is kind of half done, kind of buggy, kind of get it out there, let people look at it, and we'll fix it in version 2, we'll fix it in version 3, we'll fix it in version 4. You know what? That's fine if you're just streaming movies and music. So if I go to play some Beatles song and it doesn't work, no big deal. But when you're talking about, take Theranos, you're talking about people's lives. Oh, just put out some half-assed blood machine. Right. And then all of a sudden people that are sick are told they're fine, or people that are fine. That you can't do that. And the same thing with people's money. You can't put out a half-assed thing and people have their money, their tokens tied up, and it gets hacked or stolen or it doesn't work right. So the industry is going to have to start to get away from that Silicon Valley mentality. Get what version 1.0 out there. It's not quite ready for prime time. We'll fix it along the way. No, you got to get it out there, and it cannot fail, number one. Because if it does, you should be done in this industry. And I think that will go a long way, because a lot of these hacks are largely because of that. These developers, again, it's the mentality of the casino. We got to get it out the door, because then our coins will go up and we'll all become rich. Oh, but it's not ready. But if we waste more time, it's profit opportunity. Well, once the mania is gone, it's about the only way we're going to be good, or the only way we're going to make money, is if what we do is good, not first. And so, yes, it's going to take some time to get rid of all of this. And it's going to be painful. And maybe the winter, as they call it, bear market, might turn into an ice age. But I do think it's going to emerge. And I'll give you one thought for you. In the last 15 to 20 years, depending on which measure you want to use, there's 11 sectors in the S&P. The worst performing sector is financial services. Within financial services, the worst performing sector, or one of the worst, is banks, is money center banks. Mm-hmm. In fact, money center banks in the United States are at the same price, the index, that they were 20 years ago. Think of the bull market we've had. And in 20 years, money center banks haven't done anything. What is the marketplace telling us? They're screaming at us. The financial sector is ripe for disruption. It is ripe for somebody to change it. Now, cryptocurrencies and decentralized finance had a promise that it was going to be the answer, and then lost its way. If it could refocus itself on disrupting the financial system, it's got a chance of really becoming something important from here. But if they want to continue to be a casino, I think it will fail. I don't think it will be a casino. I think people are going to be driven out, and I think it's going to become more of, let's rebuild the financial system instead of let's pump a token and become rich by tomorrow.
Right. Well, let's hope you're right. What I'm taking from what you're saying here is folks that are either currently invested or thinking invested in the crypto space should prepare for the possibility of a winter/ice age. Not saying you're completely guaranteeing one, but you're saying you see potential for that to happen. But hopefully that ends with the green shoots of a truly better system coming out with much better governance and focus on the sanctity of working with people's money. One thing just to pick up on, you talked about sort of the Silicon Valley mentality. So Jim, I used to work and live in Silicon Valley for a long time, and sort of through the whole internet explosion. So I was basically in Silicon Valley 97 through 2012. So saw a lot, knew a lot of people at Sequoia and other places like that. And I feel like I sort of saw the metastasizing of the mission of Silicon Valley from, hey, we're an incubator of innovation to change the world. And that shifted into much more of a pump and dump, like, okay, let's get a couple of entrepreneurs we know and a bunch of our portfolio companies, and we're going to make this new venture. We're going to all throw money into it, throw client contracts into it, show explosive growth in its first year or two. We're going to pump this thing to the sky, then we're going to dump it on Wall Street. We're going to IPO it. We're going to walk away with bagfuls of money. And if this thing ever is going to churn a profit, that's those losers' job to figure out in the future, right? We've made our money, we're done, right? So it feels like that's just spilled over in steroids into this crypto space, and there's probably even some marriage of this, right? Talk about Sequoia being one of the largest owners in FTX.com, which begs the question: look, if you guys are the smartest guys in the room, and the guys at Sequoia are supposed to be the smartest guys in the room, how could you not find any of all of the incredible malfeasance that's gone on that we talked about at the beginning of this thing, right? I mean, junior employees, no background, it's offshore in the Bahamas. So you just go through the list of all the risk factors that we're now beginning to see. But the smartest guys in the room somehow didn't pick up on any of them, right?
The smartest guys in the room saw dollar signs, and they saw cryptocurrency values growing to the sky, and they saw the potential of a lot of money to be made. And it becomes insatiable and almost impossible to stand there. And we saw this in 2008 on Wall Street too. There's plenty of examples back then on Wall Street of people that were putting up the red flags. There was one in Merrill Lynch where one of the risk managers at Merrill Lynch was trying to point out the problems that they were having in the mortgage market. And they spread it to the head of the mortgage department. And he turns to the people that were, during the meeting, this very famous in the book Too Big to Fail. He turns in the meeting and he says, last year this department made $250 million for this company. Unless you've got anything else, I'm going back to work. And he just ignored them, and no one stopped him because they were making a lot of money. And so this is what happens: is everybody gets blinded by the money, and maybe in the deep recesses of their mind they said, this doesn't look right, it doesn't smell right, but man, look at the money they're making. And worse, if I say no to FTX and I'm at Sequoia and I'm a partner at Sequoia and I say no to FTX, and in 3 or 6 months later, they're worth 3x or 4x or 5x more, I'm a former employer, former partner of Sequoia. So that's the part of the mentality or the mania. It becomes impossible to see this stuff.
Yeah, it's the easy money drug. All right, well, look, you'd think we've exhausted the topic of the craziness at FTX. We haven't. And there are a few more things I want to dial through before I get into the macro part of this conversation. So back to your point on sort of reputational destruction here, we've just been beaten a lot on Sequoia. And of course, there are a lot of other hedge funds that are in there that we're going to see over the next year, which bodies start floating the surface here. But I'm going to go through a couple of names that are getting tarred in here, and I think we're just beginning to see the start of it. Kevin O'Leary, the Shark Tank investor, there's a clip of him circulating right now talking about why he felt comfortable investing in FTX, and I think he became one of their official spokespeople. And he said, well, the main reason why I did it is this kid, Sam Bankman-Fried, his parents are both compliance lawyers, right? Yeah. And so he's like, if there's anybody who I can trust is not going to do something, illegal or untoward, it's going to be this kid, because his parents are going to be, watching him like a hawk, right? And that was sort of part of the selling point here, right? Is that he was coming from the good guys, the white hats, who are looking over at everything here. So, obviously there's egg on Kevin O'Leary's face. His parents professional reputations, I think, are got to be destroyed at this point in time. And then there's all sorts of interconnections too, where he's got like an aunt that's running a program for the WEF. He's got his father is writing tax law for Elizabeth Warren, or tax policy for Elizabeth Warren. This is all part of the whole Democratic, donation issue you were talking about earlier. And his mother has some sort of big oversight role too that I'm forgetting about here. But
she was the head of handing out. She handed out the donations. His political action committee. She ran his political action committee.
Okay, that's
the $40 million. Yeah.
Okay, so she was in charge of dispersing that $40 million.
Yeah.
So there's just all fingers pointing every direction about how fast Bankman-Fried got as successful as he did, and was there political support to try to make him successful? And there's been apparently money that's been going to Ukraine, and I mean, you know more about this stuff than I do, but in addition to those folks, so Gary Gensler, who's the head of the SEC, you talked about how the SEC has been slow walking its oversight here. Gensler famously taught about cryptocurrencies at MIT, and apparently his boss at MIT was Bankman-Fried's father, right? So
not quite. It's Bankman-Fried's girlfriend, Caroline Ellison, who was the president. It was her father, who's the head of the economics department at MIT. I think his name is Dan Ellison.
That's right.
I think I got the first name right. Technically, though, Gensler did not report to Dan Ellison, but he was at MIT. He was a professor at MIT at the same time, and they were friends. They knew each other at the same time. So yes, all of this is all in a circle, which has got people thinking that there's a grand conspiracy. And you're right. The next one is a lot of money came from the Ukraine. Remember, the U.S. is sending God knows how much money to the Ukraine, and some of that money got invested back in FTX, which has actually been the largest donor to the Democratic Party. Yeah, that big circle is going on too. This begs the question as to whether or not there's a giant conspiracy going on here. Look, maybe there is. I always will attribute to incompetence what people see as conspiracy, that they just dumb luck them way into this and they dumb luck their way out of it. But there might be some kind of a conspiracy here as well too. But this has been unusual to see something like this with all of these connections. Look, we all know the story of Bill Gates, and we all know the story of Mark Zuckerberg, and these were young people when they made a ton of money, or Steve Jobs. They were young people when they made a ton of money. But our impressions of them was they just had an interesting technology that everybody wanted, and that's why their net worths blew up and stuff. They didn't start off from day one at 28 years old, starting to buy congressmen and trying to, lobby for regulations or anything like that. Bill Gates famously didn't give a dollar to any politician until he was in his 40s. He tried to avoid that as much as he humanly could. Mark Zuckerberg did the same thing early in his career, in his 20s. He had wanted nothing whatsoever to do with Washington. But Sam Bankman-Fried, the minute he got $2 together, he ran to Washington with a lot of that money. And maybe his parents, because his parents were involved in it to some degree, or something like that. But we'll see. The last thing I'll mention on this, Adam, is guess who's been embedded, if you will, following Sam Bankman-Fried around for 6 months to write a book about this.
I was going to go here, and it's the best person in the world.
Michael Lewis, the guy who wrote Liar's Poker and The Blind Side and The New Thing. And yes, you're right. If there is a financial writer in the world that would probably be able to untangle all this, it's Michael Lewis. And he's been working on the book for 6 months. He just got the perfect ending for his book.
he did. And again, there's no better person to sort of deconstruct this and tell the story in a way that the public can understand it. It does sort of beg the question, though, if he's been there for 6 months, he must have been kind of duped by this, because you would think he would have maybe been ringing a warning bell of like, I'm here covering something that looks like maybe it's a massive Ponzi or fraud or whatever, right?
I don't know the details on this, but I wouldn't be surprised if he was under some kind of non-disclosure. Look, if you want if you want to sit next to me in the private meetings, you can't run out the door and tell everybody what was said in these meetings. So, you can write a book about it after the fact, subject to us making sure that pertinent facts are not being, material facts are not being leaked out. So
Right.
that might be the case. I mean, that he maybe when he's allowed to talk, we'll find out. He'll be asked that question.
And
Let's
let me
just
say,
put it
I
that
cannot
way.
wait to hear that. And just getting back to the people getting tarred with all this, you again will know the details better than I, but you referred to this earlier, but Gensler had been working with SBF on writing crypto policy, and the criticism was that it was being favorable to FTX's specific business model. I think I also read somewhere too that like FTX had bought one of these struggling crypto firms because it had some sort of waiver on some sort of requirement, and the hope was that FTX by acquiring this struggling company would then get the protections of that same waiver, giving it an industry advantage. Who knows what was going on there?
That was Celsius that they were trying to get, that had a waiver on being able to do business without having a specific type of registration, and he wanted to, by buying them, hopefully extend it to his larger organization as well too. Yeah, no, Gary Gensler, was very close with them, was slow walking the regulation. It could be argued that in the specifics, you set up a regulatory arbitrage, that these U.S. and let's be clear here about this, the U.S. regulated exchanges, not only FTX U.S., Binance U.S., Coinbase, which everybody knows about, Kraken, Gemini, there's no problems there. There's no one's alleging problems because they have to adhere to SEC rules the same way, as I said, like Fidelity or Schwab do. They're under the same set of rules, and there isn't any problem there. But then they got these offshore exchanges, and these offshore exchanges can do things that the U.S. exchanges can't. They can offer to the customers better deals. Better deals tends to be, in the case of interest rates, deposit your coins with us and we'll give you a 30% yield. How the hell did they give you a 30% yield? Because they were paying you with other people's coins, otherwise known as a Ponzi scheme. If you tried to do that in a regulated U.S. exchange, everybody goes to jail. But if you do that in an outside exchange, no one is regulating them. And then you go, well, but U.S. investors can't go to the outside exchange. Yeah, well, you get a virtual private network and you change your address to Antigua or Nigeria and open up your account that way. And then you can go right in there and get that 30% gain until the whole thing blows up. And everybody knew this was going on. And they were saying to the SEC, you got to do something about this. And they kept saying, we're looking into it. We're looking into it. And they're like, well, do something about this. And they just kept slow walking it. And then we got to where we are today.
Yeah. And the only other point I want to put on the story is apparently another player that was in those meetings was Brad Katsuyama, who was featured prominently in Michael Lewis's book, Flash Boys, right? And I don't have the details at this point in time about exactly what was going on there. And maybe he was pushing for something that we would all support, who knows? But it's just one more name. And from my understanding, I mean, that guy was about as Boy Scout as a Boy Scout as you could get. And now, at least by association, he's getting tarred by, what's gone down with SBF. So it's just going to be interesting to see that.
Yeah, until he can come out and explain himself. Yes.
Right. But the point is I think, well, you tell me, but I mean, I think we're early on in just finding all the people who have had a finger in the pie in some way, shape, or form with FTX who are going to have to start. They're going to have some splaining to do.
That and the contagion effect will continue to grow and grow. Just to give you a quick example of what's happening literally through this morning, the blockchain is, for people that are not familiar, the blockchain is open. You could see transactions on the blockchain. You could tell where people are moving money, what they're doing. You don't know who they are because all the account names are numbers and letters. And some people have been able to piece together that this account is this person's or that person's. And then the centralized exchanges tend to commingle their accounts. But what we're seeing on the blockchain, what we understand is every one of these world cryptocurrency exchanges, except Binance, is getting outflows. People are pulling their money out of every single one of them to varying degrees. The one that everybody's focused on the most right now is crypto.com, which happens to be the naming rights of the Laker Stadium. So we're going through stadium naming rights left and right. Now they have not gotten to the point where they have to suspend withdrawals. By the way, whenever a bank or a brokerage firm has a high degree of withdrawals because people are losing confidence with them, and they have to suspend it because people are losing confidence with them, that's it. They're done. They never recover.
Right. That just freaks everybody out even more. Yeah.
Right. What I'm trying to say is that's different from your brokerage house says our website went down and you can't get your money today. That's not a confidence problem. But when you have a confidence problem like this, and crypto.com is getting outflows, people are wondering if they're going to get to that point. As the time we're talking now, they haven't, and maybe they skirt through this. But we'll see if another stadium has a name by the end of the week here.
Yes.
We might have two stadiums looking for names right now.
Tough week for sports stadiums. All right, look, I still want to get to macro.
That's always been a great contrarian indicator, right? When you put your name on a sports stadium.
Right. That, and also Super Bowl spending, right? And these were the biggest spenders at the last Super Bowl, right?
Right. What was one of the more famous commercials? Remember, the Super Bowl is February. It feels like it was 7 years ago. What was one of the most famous commercials in the Super Bowl? Was Larry David in talking about cryptocurrencies. And who was the sponsor of that commercial? FTX.
And I think, isn't it in that commercial where Larry is like very skeptical of the future of crypto? I've seen clips from that where people are saying like, Larry was right, turns out.
Yes.
Yeah, and of course there's the famous Matt Damon one as well,
which is almost 1 year. It's almost to the day. It's 1 year anniversary. That's a crypto.com commercial we were just talking about. Fortune favors the brave.
Right, and when you think of just the market cap in crypto that have been lost since those commercials aired, it's tremendous. I mean, it's in the trillions.
Right. Well, yes, it is. But in fairness to crypto, if you add up the FANG losses, between Amazon and Apple and Google and Meta, Facebook, throw Tesla in there, it's been greater. Amazon is the first company ever to lose $1 trillion in market cap right now. And it's still a viable company, but it has lost that company alone. And if you go with, I think Google, Meta, Facebook, and Amazon, they've lost more market cap than the whole crypto space combined.
True. Although I think with the exception of Meta, the percentage loss has been a lot less because it's a bigger, more established industry. Yeah. All right. Well, look, I'm trying to get to the macro part. I really thank you for sticking with me on this. The problem is the list of crazy is still, longer than we have time to go into. But I can't leave this topic without asking you to explain, like, what is happening right now? Like, what do we know about Sam Bankman-Fried's whereabouts, right? There was a whole, bunch of discussion over the weekend. He had been tweeting last week a couple of mea culpas and, hey, we're all about protecting customer assets here, and I'm going to work to make sure that the right thing's done, and I'll explain things as I can along the way. And then he goes radio silent. And then, people are tracking his plane, and it looks like maybe he's in Argentina, but no, Reuters got a text that he was in the Bahamas still. And so what do we know?
And he started tweeting last night a little bit, some cryptic messages that no one knows.
Yeah,
as far as we understand,
just random letters, basically.
Yeah, exactly. As far as we understand, he is still in the Bahamas. He is cooperating with authorities in the Bahamas. That's what we understand. But everybody's been kind of tight-lipped. Caroline Ellison, the former head of FTX, Alameda Research, it is believed that she made it to Hong Kong and is trying to get to Dubai because they don't have extradition with the United States. So she's trying to get out. That's what people understand about her.
Right. And so, sorry to interrupt, but I heard, and you can deny if this is wrong, that while he was in the Bahamas, Sam and several of his executives were trying to get from the Bahamas to Dubai as well, but they got detained before they could get on the plane.
There's been stories about that, and it's unclear whether or not they were trying to leave, and it'll remain to be seen what happens. But at this point, by all available information, because authorities are being very tight-lipped about a lot of this stuff, and of course they're not going to tell us directly. I think that Sam has probably been told that anything he tweets has to go through 15 lawyers now. It can't just be off the top of his head, which is why all he's left to do is just tweet random letters. Because that's literally what he was tweeting last night, was like random letters, and people were trying to ascribe deeper meaning to what he was trying to tell everybody, like some kind of ransom note kind of thing or something, and so we'll see whether or not they wind up leaving, or if they can leave. But I think at this point, he's probably got no choice but to cooperate. Remember, without his cooperation, they're going to have nothing. What is FTX? It is a computer program. And it literally is. This ledger that I'm holding up again, they might have this exact same thing. This is how the industry works. It's this exact same thing with $2 billion on it. Well, if he doesn't give them the seed phrase and tell them how to access it, and he decides to get on a plane and leave, then everybody trying to piece together what happened is going to be left nowhere. They can't get into anything. They can't figure out what anything is. They can only do it with some insider's help, and they're going to need his help. And so I would gather that that's what's happening right now. I would hope that that's what's happening right now.
All right. So on that point, and again, this is another crazy thing that happened in this story. I think it was like Friday night. It was like 24 hours after he had sent his last, mea culpa tweet. There was a claim that FTX's system was getting hacked, and that the remaining client funds that were in there were being withdrawn. And it was something to the tune of, I heard 450 million, I heard as high as $1 billion, but could be somebody transferring exchange assets onto a cold storage, thumb drive like that. So as far as we know, there may be billions sitting there on those thumb drives, and maybe that's his insurance, right? You kill me, nobody knows where this stuff is. Nobody can get to it, right?
Right. And we don't know whether or not those transfers, again, remember, this is tracking the blockchain, looking at the blocks, seeing what's moving around is how people figured this out. We don't know whether or not those were legitimate transfers. Maybe they were just moving money from what's called a hot wallet to a cold wallet, or whether or not this was a hack, or whether or not this was people that, employees or well-connected people at FTX trying to get their money out after the fact. If it's the latter, that it's people trying to get their money out after the fact, most bankruptcy law is pretty straightforward about divvying up what's left in an equitable way. Mm-hmm. That's why there's a 90-day look back in bankruptcy. What that means is, and this is something I've been trying to say to people, all these firms that are saying, no, we got our money out last Monday. You're not out of the woods yet. Bankruptcy attorney could turn around and say, everybody withdraw last week, since we have your name, we know who you are, you got to send the money back. And it's all got to go back in a pool, and it's all got to be litigated, and then equity to be distributed to everybody else. So people that are yanking money out at the last minute like this, they know who you are, because this is the exchange does have names and phone numbers and addresses and all that other stuff. They might come knocking on your door once this thing gets into bankruptcy and tell you got to return that money. So, if it's a hacker, that's a different story. But again, the problem with the hacker thing gets back to what I was saying before. So much of this stuff has just been code written so fast and thrown out there so fast, and that's why all this stuff is so susceptible to hackers. So there hasn't been a clear explanation of what that withdrawal was about yet.
Yeah, I mean, there's just so much rumor and uncertainty swirling here. That's why the story is so crazy. But I also wonder too, like, okay, there's a 90-day look back window, and whatever, you might get a knock on the door. But first off, who's got authority to prosecute this bankruptcy? Right? Is it the Bahamian authorities?
Well, they did file in the United States. So they did file in Delaware for the bankruptcy. So it will be gone. It will go through a U.S. bankruptcy court. And I think the reason they did that is the U.S., this is not a knock on the Bahamas, but the U.S. has very solid bankruptcy rules, because we've been doing it for over 100 years for complicated companies, from Lehman Brothers all the way down to personal bankruptcies. So when you get a very complicated bankruptcy like this, U.S. bankruptcy law and U.S. bankruptcy courts are equipped to handle something like this. I'm not so sure the Bahamas bankruptcy courts can handle something like
right.
this.
Or just their enforcement, like
Right.
resources. And that was sort of my point is you were saying, you've got people buying assets or investing in the exchange or putting assets on the exchange using VPNs from all over the world. It's a really hard thing to do, is to say, okay, sure, people pulled their stuff out in a scramble, but now they're all over the world, and we're just the Bahamas. We don't really have the resources to go out and track all those people down and force them.
Or worse, what the Bahamas might wind up doing is saying, all our bankruptcy laws really say is we're just going to protect the Bahama the Bahama residents that had their money in there, which is basically all the FTX employees, and then everybody else, you're on your own. Where at least in the US, the bankruptcy laws would be more favorable to protecting everybody, no matter what jurisdiction you're in.
Right. Although technically, if folks are pulling stuff off the exchanges and putting them on their nanos or whatever, if they're in Asia or Czechoslovakia or wherever, good luck trying to really enforce that, right?
Well, at least if FTX's record keeping is what we think it was, they might pull it off and stick it on one of these, but we know who you were. We know who you are. We know where you live. And we're going to come after you and knock on your door and say, you got to give it back. And if you don't want to give it back, we're going to make your life hell until you decide to give it back.
My point is for the folks that are in the US or maybe
Yes.
allied countries, but if you're in other corners of the world, it's just going to be a lot harder, right?
It is going to be harder, but not impossible. Yes.
Okay. All right. One last question before we go to macro, which is a lot of people invested in this space for that better model that you were talking about earlier, Jim. And there's a lot of heartbreak going on right now, and you mentioned Celsius and Luna and a few other things earlier that happened in the past, couple of quarters that have been shaking confidence in the crypto space. And obviously this is going to do that on steroids. What do you think is the probability of some of that capital saying, what, crypto is just it's not a safe place for my capital the way that I'd hoped it was going to be, but I still have these sort of, sound money or I want to put my money outside of the current monetary system or financial system that we have. Do you expect that any of this crypto money that came in for crypto may wander over into the precious metals at this point?
Sure. Look at what gold did last week. I mean, that if some of the money was there under the idea that, yes, I don't trust the financial system, I'm looking for a way to get my money out of the financial system, crypto was a very enticing way to do it. Gold has always been the tried and true way to do it. The big problem with gold lately is we financialized the hell out of it, right? We've got derivatives and we got ETFs and we've got futures on them and stuff. And so what we've done with gold is we've turned it into such a part of the financial system, and I've always had this paradoxical question that's always come up to me from time to time. People say to me, yeah, I don't trust the financial system. I bought GLD. Well, if you don't trust the financial system, GLD is not going to help you. Right. If what you think is going to happen, you got to buy gold coins and put it under your bed. If you think that if you're that concerned about the financial system, and yet the problem is that when the financial system has problems, so does gold. Gold, in other words, is turned into another currency, and that's one of the reasons why it was falling so much against the dollar, just like every other currency. So hopefully, if this attracts people back to gold, and we, kind of like what I said about with cryptocurrencies, let's get back to gold's original function, and that it is supposed to be a store of value independent of the financial system.
With no counterparty risk. Yeah.
Right, with no counterparty risk. Let's quit trying to make another 13 ETFs on the New York Stock Exchange, because that does introduce counterparty risk. That does put it front and center. It makes it just like another corporate bond or something like that. That is where I think the problem with gold has been. But maybe if this is where we go back to that, or that original knitting on gold, it can find its bid again, as opposed to being another financial asset, even though we try to think that it's not.
Okay. All right. Great answer. All right. So returning back to your answer to my very first question of this discussion, and I appreciate you giving us so much time, Jim.
Sure.
Feel free to give me the cutoff signal anytime here if I
I'm
go
good.
too
I'm
long.
just wondering if the listeners are good.
They're good. They're good. Don't
Yeah.
worry. All right. So you talked about how you think CPI has peaked. So an interpretation of that is we are now heading into disinflation going forward. You've said that you think it's going to take a while to really wrestle inflation down. I guess let's just start from your macro outlook, looking at just sort of economic growth. What do you see as sort of the growth prospects from here as the Fed is having this wrestling match with inflation? It's continuing to hike. It's told us it's going to hike more. It's told us it's going to hang out and not pivot. All of that is depressive of growth.
Right. So the first 2 quarters.
Our interview with Jim will continue over in part 2, which will be released on this channel tomorrow as soon as we're finished editing it. To be notified when it comes out, subscribe to this channel if you haven't already by clicking on the subscribe button below, as well as that little bell icon right next to it. And be sure to hit the like button too while you're down there. And remember, we're continuing our new practice of publishing my top takeaways from these weekly interviews. To get mine from this interview with Jim for free, just go to wealthion.com/AdamsNotes. And finally, if the challenging macro outlook that Jim has detailed in this interview has you feeling a little bit nervous about the prospects for your wealth, consider scheduling a free, no-strings-attached portfolio review by a financial advisor who can help manage your wealth, keeping in mind the trends and risks that Jim's mentioned here. Just go to wealthion.com and we'll help set one up for you. Okay, I'll see you next in part 2 of our interview with Jim Bianco.